Hello, thanks for tuning into this episode. Before we start, FinTech Focus TV is brought to you by Harrington Starr, global leaders in financial technology recruitment. Head to the Harrington Starr website and check the links below so you can download the latest copy of the Financial Technologist magazine. And also, we've got the TradFi and DeFi Era of Convergence documentary coming up. If you're interested in the merger of the two, please get in touch. Thanks a lot and enjoy the show. Hello and welcome to another episode of FinTech Focus TV. This one is a special one. We are coming live from SteelEye's HQ with Matt Smith. Matt, how are you?
Hey, good. Nice to have you, Toby.
Great to have you back on the show. This is the first one we've done it in person for a while, I think. Maybe we did one ages ago back in the office, the old offices. We've been on Zoom for ages and now we're back in person. And there's loads of exciting news for us to share today. Some really exciting things that are happening to the business. Before we get into all of that though, tell us a little bit about yourself and SteelEye.
Yeah, so SteelEye is a RegTech company, so we sell regulatory compliance solutions to the financial markets. But the reality is we're a data and analytics company. So we sell RegTech solutions to the market, a RegTech business to our investors. But at the heart of it, we really are a data company.
Yeah, and I think we've spoken a number of times about this in the past. It's a company that I think has been incredible, and we look back to 2020 and the pandemic. It's another business that sort of thrived through that, if that's the right way of saying it. Move further forward, and tell us a little bit about what's happening at the moment.
Yeah, so it's an exciting time for us. 2 weeks ago, we closed our Series B fundraise for 18 million sterling.
Congratulations.
Thank you. And for us, it's been a long journey. Actually, it was August 24th last year. I was in Bermuda for a board meeting, and it was where the board instructed me to go off and start the process of fundraising.
Yeah.
And literally I don't know how these things happen, but it was a year to the day that we actually closed the funding round.
That's incredible, isn't it?
And yeah, I mean, during that time, loads happened, right? Like we went through the process of looking for bankers to work with us on the process. It was the first time we used bankers in the fundraising process. And then obviously going out into the market, trying to find a partner for the next stage of the journey. And, there's things that we want to do as a business that we had thought a lot about, and we want to find a partner that can align with that. And we did that all in an environment where we had conflict in the Ukraine. And this was driving energy prices up. And on the back of that, we saw lots of inflation. We saw supply chains seize up with the pandemic, with Brexit. So it was a really tough environment to raise money. So it's exciting.
I think that's a really interesting thing as well, because this is at the moment isn't necessarily the easiest time to raise money. I've spoken about this on the show a number of different times, that right now, good companies are still able to attract and get investment into their businesses. Tell me some of the learns that you've had over that sort of thing. Look, you've got a great track record as a company, and that's definitely going to help. But also during that process, what was different? Because I know you've had various different times of raise at various different stages of growth of the business. Tell us what's different this time out.
Yeah, so this was a very difficult raise in a market where we originally thought it was going to be relatively straightforward to raise capital, and it wasn't. It was very, very difficult, and there's reasons for that. But it was August 24th last year when I was in Bermuda for a board meeting where I was instructed by the board to initiate the fundraise. And subsequent to that, there was a very long journey for us. We, for the first time, appointed bankers, which we hadn't used in previous raises. Well, I'll touch on some of the previous raises in a moment. In a macro environment that was incredibly challenging. We had conflict in the Ukraine post-pandemic. That led to increasing energy prices, which led to inflation. Supply chains were seizing up, so the cost of goods were going up as well. And all this in a world where we went from kind of very high multipliers on revenue for SaaS businesses from the private markets, now decreasing massively as the private markets were trying to reprice things. And with no alternative, the private markets were starting to look to the public markets to kind of set where they think that prices should be at, which makes no sense, right? So if you're trying to position an early stage growth company against a publicly listed firm.
Yeah.
I mean, they're two different beasts altogether, especially with the rate of growth that SteelEye was seeing, as many early stage companies do. And when we set out, it was Q1 this year where we really began the process of meeting with investors and looking for the right partner.
Mm.
And when you're building a business, you look to what your plans are and try to align that with the right type of investor.
I think that's really important.
It's fundamental, and it's not easy, right? Because we're interviewing them as much as they're interviewing us as we go through the process. But eventually, you get to the place where you find the things that click. I think ultimately, I remember one day we were having one of the final meetings with Tenco's, who's our new partner for the next stage of the growth of the business. And Brian Lynch, who's our president of North America, called me. He's like, I'm going to go in person to meet Tenco's at their office. And about a month and a half before, Brian told me that we needed a bigger office in New York. And we relocated into a new office building. And the day he was going over there, he looked at the calendar invite, and we realized that there were 2 meeting rooms down, or 2 offices down from us. So it was meant to be. So we're excited about working with them. I mean, earlier fundraisers have a different profile of challenge, right? Like, so when I began raising early funds, right, we looked at the EIS, SEIS market for angel investment. We ended up finding a family office out of the US who joined. And I think we raised $2.9 million the first round. But that's difficult because you're basically going to people saying,
here's the hope and the dream.
Yeah, here's a business that doesn't exist and give me some money. And in many cases, it's their personal money that they've raised or earned over the years. So it's really emotional for them to let go of that cash. And that's a lot of trust they put in me and my team. And, we very much respect that. A year after we did that first round, we partnered up with Illuminate Financial, early stage venture capital. And they had met me in that first kind of process of going out looking for the first round of funding. And they were kind enough not to laugh at me when I walked into their office with a PowerPoint presentation, valuing it at X million with nothing in it. But they watched and we delivered over the next year. And on the back of that, they decided that they wanted to be part of the journey. And we've loved working with them. We still work very closely.
It's a brilliant company to be partnered with in that journey.
Yeah, so we've worked with the Marks, and Alexander was on our board. Not long after that, we needed to continue to grow the business, and we were looking for a new partner, and we did our Series A fundraise. And I ran that process with my CFO. And again, these things are hugely time consuming. They are big distractions because you're not focusing on your business as well as you should be when you're raising capital. And it's actually very emotional. Like you carry a lot personally into that process. And we were very lucky to partner with 8 Roads or Fidelity International Strategic Ventures. And they came into our Series A raise. And that was quite profound because from a partner perspective, we actually had a few bids on that round and we took the lowest price. And we did that because we really believed that the value that an organization like Fidelity could bring was significant. It's everything from HR to technical security. You get access to a lot of corporate support services that early stage companies just don't get. And that's been, again, a very profound thing.
It's such an important aspect, isn't it? To say, right, this isn't all about the highest bid and how quickly you go, but who's going to be that part? And I think sometimes through 2 reasons, one of which is either greed and one of it is desperation. People make pick those partners for the wrong reasons.
Well, you have to be lucky, right? It's not easy to get to a position where you've got options. And I know many people who have fundraised, including us, at some points in the process where you don't have options and you take the capital necessarily to support you. But as your business starts to grow and succeed, then you earn the right to have those options. After that, so this was mid-pandemic, and this is the first time this organization has ever invested in a company where they haven't personally met the founder, and it's the first time I've ever taken capital from.
There's a lot of firsts at that time. Wasn't there?
For sure. And so you're meeting over Zoom, you're trying to get to know each other, you're trying to build like a personal rapport. Because when you're bringing on an investor, it's like a marriage, right? In many ways, you work very closely together, you call each other at all hours of the day to work through challenges and celebrate the successes as well as the hardships. But I was really grateful when Ed Mullen and his team from Beacon joined. I remember having so many Zoom calls just trying to kind of build this friendship. We hadn't met until about 2 months ago.
Is that right?
Yeah, and he'd been with the business for a few years. When he came over to London, in fact, part of the reason I was in Bermuda when we had that board meeting was Ed and I were going to meet there because he couldn't come to the UK and I couldn't go to the US.
Find a middle ground.
We found a middle ground. But unfortunately, it was when hurricanes were taking place in Florida, which is where he was based, and he couldn't make it to Bermuda.
Oh well, it's still a board meeting in Bermuda anyway.
There was, yeah,
it's got its pluses. That leads us to here, and you mentioned there that there were challenges for a number of different reasons about this round and harder than anticipated. I've said it that I've spoken to Mark over at Illuminate around this as well, that there is an appetite and there's money in the system at the moment for good businesses, and I think the clear thing is that, and I was talking about this the other day, that good businesses should always be able to attract money, but that story's got to be that much sharper. The expectations of the founder have to be that much sharper as well.
Yeah,
that's a difficult thing. You talked about the personal nature of all this. This is the baby that you basically thought of and brought up and reared. Tell me a little bit about how that process came through, where it was the marriage of expectations.
Well, we were learning a lot, right? So when we went out into the market, we were still in the healthy market. And it was only in the first couple of weeks we started to realize actually things were changing significantly. And it was when the central bank started to increase rates. And that was where there was a bit of a panic, right? Now, you've got all these private investment firms. There's a load of capital out there right now. So they're sitting on lots of money and it needs to get deployed. They've got LPs who've got expectations of them as investment organizations. And suddenly nobody wanted to put bids out because they didn't know how to price it. And it was not that they didn't think that the businesses were good or sustainable or that the world was going to blow up. They just knew that there was a pricing reset happening. And we came right at the front of that. Right?
Yeah.
So we're trying to figure it out. They're trying to figure it out. Our bankers are trying to figure it out.
Yeah.
Our investors are trying to figure it out. So you're kind of working through all this.
And who out of those four make the call? How does that come into?
Well, it all have to, right? At
Yeah.
some point, right? Like you got to triangulate the different kind of information sets you have to come to the right place, and you got to get comfortable with it. And we were prepared for that, and it was just working on, what are the needs of the business. We were and still are very confident about our business, the growth that we're seeing. I think what you'll find from a private markets perspective. So for those of you who are out raising capital now, what you'll find is as the year kind of goes into the last couple of quarters, that capital will start to move again. I think people will get more comfortable with the pricing adjustments and where things should be priced.
Yeah, I agree with that.
But I think also that there's expectations from the investors into these funds that they're deploying this capital. So they just can't sit on it. I mean, at the end of the year, if you're running a venture fund and you've done no investments, your LPs are going to be asking.
You've got problems. Yeah, exactly.
Yeah.
So it makes a really, really interesting market on that. But as I say, good companies are attracting investment.
Yeah.
So that means that to raise a significant raise as you guys have done at Series B, there's things that you're doing right. Talk to us about the sort of criteria that you felt made you as investable as you have been.
Well, I mean, there's loads in it. I want to come on to people because that was a big thing for us when we were looking to Tencos as our potential partner. Number one, you've got to have a solid business, right? So we had solid growth. Last year we were boasting a 98% client retention rate. We had 90% year-on-year growth. So the business was growing very healthy. We incorporated in Portugal and grew our India team on the back of COVID from, I think it was like 6 people. It's now 35 and growing fast.
Yeah.
And well over 100 staff now around the world. We opened up in the US. We know there's a lot of opportunity there for us, and we want to go after it. So it's a good, solid business. We've got a great product, so I'm very proud of our product. It's doing something that no other solutions provider can, right? So we're able to truly do communications and trade surveillance, a holistic surveillance. I've heard firms talking about this in the market for years. The reality is nobody else is doing it. Doesn't mean people won't, but we've got a bit of a march, a head start, and we need to capitalize on the momentum there. So that makes it appealing. And then culture and people. For us, right, like we really believe that's at the cornerstone, is the bedrock of our business. We invest a lot of time, effort, thought, and capital into making sure we have the best culture possible and also consistent, right? So if you go to our India office, I haven't been yet, but I've had team members go over and I'm due to go over in the next month. But I'm told if you go into the SteelEye office in Bangalore, not only does it feel like you're in the SteelEye office in London, but culturally they behave the same.
It's got a cookie cutter too.
Yeah.
So how did you attain that? Because that's not an easy play, is it?
Well, it's thinking about people, right? So Arjun, who is our managing director out in India, was based here. And we have him come over regularly. He was based here before we opened the office out there. and moved out to open it. It was quite a cute story. So Arjun was working with us in the very early days, and his visa was up, and we couldn't sponsor because the company was too young. So he said, "I'll go back to India for a year, and after that, we'll do a transfer, and I'll come back." Well, he did, but then he fell in love and got married.
Okay, there we go.
And as a result, he ended up staying. And in time, we built the business. He built the business and managed to keep the culture.
I love that serendipity of how it works as well. So that wasn't necessarily
It wasn't a plan at all,
Yeah.
and it kind of worked. We were actually looking at Northern Ireland as a nearshore.
Yeah.
Portugal. Yeah, that's a great location. Portugal, we have an office in Braga built around a university. Just phenomenal people out there. Some of the smartest data scientists and engineers I've met, and we're very excited about our continued commitment to Portugal. I was out having lunch with the UK ambassador to Portugal a couple of weeks ago. And then the US. So we opened up in the US. Now that again was very fortuitous. So Brian and I both had companies in the Illuminate portfolio.
Mm-hmm.
Brian and I were working together. We were competing together many years ago, and ultimately he sold his business to Bloomberg. And it was the week that we decided to do the fundraise and expand into North America. This was in the August board meeting. Brian calls me and he's like, "Matt, have you got anything going? I'm keen to get back into the early stage." And it just worked, right? So he joined us, but he culturally knew us. My CFO used to be his CFO, so there was some kind of tie in there. He knew our people and very much aligned to our culture. We then have sent out Emmy Grandstrom, secondment to help us not just build the marketing franchise out in North America, but help instill the culture.
Yeah.
So it seems to be working, and the culture evolves, but it's an important element to why Tenco's decided to invest in it.
I think that's a really important part, isn't it? Because the more and more I look at this, the more people I speak to, the more I recognise that culture is a key ingredient to everything that successful businesses are built on. I think sometimes people really focus on products or the technology and all those sort of things, and they make a lot of noise around that. But it's the culture and the people that allow all of those great things to happen as a company there afterwards.
You have to have it all, right?
Yeah, absolutely. And I think it's driven by that, isn't it?
Yeah,
if you've got culture, you keep the retention. If you've got the retention, you can do great things and attract greater people, etc., etc. And I know that's been the secret ingredient that you guys.
It's been hard, right? I go think back to early funding and things like that, like the stages where it's make or break, right? If you run out of money, that's it. The company's gone, and you're doing this while trying to build a culture.
Yeah.
And I just remember in those days there was these waves where the culture was awesome, and then it was terrible, and then it was all along we had a great product, right? And we had a good business, but it was kind of getting all that right, and then at some point it just kind of all connects. And
so what allowed that to connect? If you say you went through those undulations of culture.
The people, getting the people right.
So people.
Find the right people. If you've got somebody who's bad for culture or toxic, certainly an early stage company, they just have to go and they have to go fast.
Yeah.
And you've got to learn how to recognize that. And then the good people empower them, right?
And you've spent a lot of time, thought and energy making it a great place to work as well. You spent a lot of time making sure that you're thinking of people. I mean, look, I know you had all the company's kids Amy the other day as an example, but I think there's a lot of thought and attention put into that. Has that always been conscious, or has it been the fact that it's something which is in you naturally?
So if you look at our culture, how I kind of think of it, right? We're a company of foodies.
Mm-hmm.
I'm a foodie. I love eating out. I encourage it. I support it, and everybody seems to kind of have that in them. In fact, one of my favorite interview questions that I like to throw in randomly halfway through, if somebody's watching this and they haven't, is what's your favorite restaurant and why? And the reason I ask, as much as I'm curious about learning about new restaurants, you learn a lot about somebody, right?
Yeah.
What motivates them? What's kind of emotionally connecting them to an experience that they have while eating? What's the food they like? And you learn a lot about somebody, and you hear some fascinating tales.
I mean, this is now a question which can't not be asked. What's your favorite restaurant and why, Matt?
I get that thrown back at me, and that's hard because I've got so many. The one I tend to fall back on because it is a special one for me is I used to live in Hong Kong for many years, and Southeast Asia is very kind of close to my heart. But there's a place in Macau. So if you've ever been to Macau, Macau is the Vegas of Asia. It's an ex-Portuguese colony. It's got the casinos. It's 45 minutes by boat from Hong Kong, or like 5 minutes by helicopter. And then on the very backside, as you go through, way past all the casinos into nowhere, there's a beach. And on this beach, there's a little restaurant called Fernando's. And you just get sucked into Portugal. And the food is great. It's really inexpensive, and it's just magical.
Love it, love it. So let's get back on to script. to script from that on the segue. There's investment, there's excitement, there's companies who are backing this, the businesses, the business and the records, and all of the good news keeps on coming out of SteelEye at the moment. Tell us about what this means. What does Series B mean for you, for your customers, for the team? Where does it go?
Well, I mean, we were growing fast anyways. We were investing quite heavily into growth. We saw North America as being a key opportunity for us. We have clients in Canada and the US today, and we can support that from here. But for us, there's a big sales and marketing and sales support agenda that we want to invest in, which is where we're going right now. So we have a hiring plan. We're looking at recruiting quite a lot of staff over there, mainly on that kind of commercial side of things as opposed to engineering, right, where we do a lot of that here in the UK, Portugal, and India. So we'll be investing a lot into there. We obviously will continue to grow our business here in Europe. We're investing a lot in bringing in people to help us do that, accelerate our products, scale the business. We're now selling into tier one institutions as much as second tier institutions. And there's a whole different profile of how you support that, how you execute that, expectations on products. So we're investing a lot into that, and we'll continue. North America for me was always a strategic growth opportunity from a geographical perspective. But we've started to do a lot of business in Asia, coming into Australia. We view that as very much a growth opportunity for us. So we have clients in Asia and Singapore and Hong Kong, Australia. We've got a person going over to Melbourne to start helping set up the business down there. We'll be setting up in Singapore to support the region. And for us, that's kind of an exciting side of the business that is opportunistic as opposed to strategic, and that's just driven off commercial opportunity.
So again, it comes down then to an increasing client base, more options. Talk about the products in itself. What do you anticipate? What can customers expect to see from you?
Well, so we offer 3 products today. So we do communication surveillance, trade surveillance, which is best execution, TCA, market abuse detection, and then finally European regulatory reporting. And we'll continue to support those kind of 3 vertical ecosystems. We are the only provider that we know of that's doing holistic surveillance across trade and communications, which in this world is absolutely relevant. So if you think about insider trading as an example, if somebody's offering you a product that does communications or trades independently, I'm sorry, you're not actually supervising for insider trading. To do insider trading, you need to know the orders and trades. So what was being traded? You need to know what was going on in the market. So market price, market volume, you need market data. So we have all the market data. You need to know what's being said. So is somebody on WhatsApp, Bloomberg, email, voice. And then finally, what's going on in the news. So you need news information to actually do insider trading properly. And without having all that information together in one place, you wouldn't be able to successfully, as far as I'm concerned, truly monitor for insider trading. We're the only provider in the market today that offers that. That could change, will change at some point, I'm sure. But today, that's just the facts. So we'll continue to invest in being the strongest in those products. Are we going to do Canadian IROC reporting, swap reporting in the US? Maybe. We're figuring that out as we start to work out our US strategy. Certainly what I want to do a lot more of is empower our clients to harness this data, right? So you go through a painful exercise of building a data lake that's fully populated, make use of it, open REST APIs, reporting capabilities. We know a lot of the competition in this space will find ways to capitalize off their clients for allowing them access to this data that belongs to them. We believe in the democratization of information. That this is your data, you should have rights to it, you should be able to access it. So we're going to continue investing in making that a reality for our clients.
I think that's the exciting part, isn't it? The scale of the opportunity. Whilst the business has done as well as it has so far, there's still, from America through to the tier ones to this enormous scalability that across
vertical, we sell to everybody, right? We've got some of the biggest energy trading companies. We've got world tier one banks. We've got all buy side, sell side brokers, hedge funds, asset managers, you name it, they're clients of all different sizes, from tiny to huge. And we can support them, and that's really important. We've got over 140 institutional clients today, and we're signing up somewhere between 3 and 7 a month. And we're continuing to work on ways to optimize our organization to support that. The more efficient we are at onboarding, as an example, the less strain it puts on my integration teams, the less complexity there is for clients. We're just implementing a system to optimize that. And we're looking at every element of our business. How do we scale faster, leaner, and meaner?
Love the sound of it. So I'm going to finish with one last thing. That there's excitement, and we're talking about growth, and we're talking about a business now that's going to really take the bull by the horns and move further forward. When people are watching this and thinking, that's a ship that I need to be on, why are people joining SteelEye? Why should they join SteelEye? And what's the opportunity look like for people who are coming into it?
Well, I don't obviously interview everybody, but I do interview a few roles. I always ask that question, like, why do you want to work for my company? I think like the word on the street is we've got a reputation of really treating our staff well. We have a lot of integrity, and that's internally and externally with our clients as well as with our employees and partners. We have a great product. Right? I mean, I'm lucky as an entrepreneur when you start a business. And you've got no product, and you've got to build it, and you've got engineers off coding it. When it comes out good, you're just very lucky. I remember when we hired our first UX designer. He was an Italian guy, and he would come in, and I'd sit there and say, I want it to look like this and this button to be there. One day he looked at me and he's like, Matt, if you tell me how to design this one more time, I'm out of here. So then the next 3 months, I just had to sit there, crossing my fingers, hoping when the ta-da moment came, it was going to be a good product, and it was.
You did all right on that one.
Yeah.
So that whole thing, I think that from my experience, and this is outside looking in, and obviously having some sort of interest over the years and seeing it all grow. It's again, it's great people mixed with being looked after and doing some exciting things that are really moving the markets further forward. So, Matt, congratulations. It sounds like everything's going really, really well. Excited to see what's happening.
The hard work starts now.
It does indeed. Give yourself a week or two to enjoy it. But Matt, lovely having you on the show.
Yeah, thank you.
And thank you all for watching. We'll see you soon on an episode of FinTech Focus TV.